with respect to the consumer, we see the consumer hanging in there, pretty resilient still across the income spectrums. And what we find is a little bit of behavior shift from lower income consumers. They're not stopping spending, they're just being more discerning about how and where they spend.
We've always said we want to give people great portions, we want to give them what they want. And our team members...
You've not shrunk the portions.
No, we never have. Like from the beginning of time with Chipotle, I think there were billboards that said burritos as big as your head. Like that's never changed. And our teams, they are focused on giving people what they want.
Inflation has been a challenge for this industry, particularly in the depths of the pandemic. More recently, in our most reported quarter, food inflation was about 1.5. So returning more in line to that normalized 1 to 2% inflation, which we've historically approached.
All right, welcome to our Restaurant and Food Retail Access Day. We have over 18 plus panels throughout restaurants and food retail, and that represents over 100 plus operators throughout the system. First, let's kick it off with our cannabis panel. We have several private cannabis operators, along with Tim Seymour, who is not only a major investor in the cannabis space, he also runs an active ETF, and then a regular on CNBC's Fast Money. So Tim, why don't we just kick it off with you? Tell us what you're seeing right now in cannabis.
Great. There's no question that from the investor front, I would say we not only have a lot of frustration, but there's probably fresh blowback. And you know, I get calls. I'm hearing from other people who you have investors or are investors that I think are frustrated that we haven't seen any fall through. The bottom line is that prices. If you took a chart and you were at August 29th of 23, before we knew we were going to get the announcements on rescheduling and brought them straight to today, the cannabis sector as a whole is trading, up 25, maybe 30%, which is pretty extraordinary considering those were all-time lows. And so if you think about what the impact has been and meant for valuations, it's hardly equated to the potential game-changing nature of rescheduling. And obviously, rescheduling doesn't change what exchanges do, et cetera. But the fact of the matter is, this industry is still dominated by two things. It's dominated by macro, and it's dominated by the technical dynamics of the industry, which include the headwinds and essentially the obstacles to new capital coming in. Everything from prime brokers to custodians to, of course, exchanges. And even though I think exchanges are not the biggest issue, especially when you've got one of the world's largest exchanges in Toronto, pretty much giving a green light to any cannabis company that wants to go list there. So frustrating. Obviously, the entire industry, whether you're an operator or an investor, is waiting for certain follow through on the draft rule. There are catalysts that could come with that. But right now sentiment is frustrated at best. And if you think, again, I talked about just really where we were before we even knew of rescheduling, or really where we were on the peak after the announcement, at least the April 29th announcement, we've given back almost 40%. But if you told me that the difference between rescheduling was 30% from all-time lows, I would have told you you're crazy, even though I know this industry has challenges. And as we always all probably say in markets, tell me the headline. I'm not even sure I can tell you what the market has done, but even on this one, I'm a little surprised.
And with the election coming up, what are you looking out for? How are you thinking about the rest of the year?
Yeah, I think the key for folks are two things around both the judicial review. A catalyst would be whether we could get some kind of a safe harbor memorandum out of the DOJ, which would embolden people within the capital markets industry, embolden people in a lot of different corners of places that I think would help assets re-rate. I think we're all, for a lot of different reasons, including just as citizens walking the planet, the debate on the 27th is one where, will Trump address any view on cannabis? We all remember that this was not a guy that cared to really disrupt what was going on. There was a lot of speculations around his AG, and even despite the circus that existed just more broadly within his AG, I don't, I'm not too worried about this. I do think that there's some sense that a reversal on some kind of resolution of disapproval that could come in a new administration is a pretty big process as well. So I just, the political landscape is obviously very important. Let's get this thing done under a Biden administration, independent of what anybody thinks is the next administration. But the next administration, if it's Trump, doesn't scare me from a cannabis perspective.
Okay, thank you so much. Let's bring in our private operators and see what everyone has to say. Mr. Multi-State, we can kick it off with you. Our questions that we prepared our operators with is just one, if you could rate your optimism on a 0 to 10 scale, where do you stand today? And where were you about 2 months ago? And if there's any change in your optimism, why? Second question, if you could just talk about general sales growth in the second quarter to date. How does that compare to your first quarter year-over-year growth? And then how much of the growth is from volume versus pricing? And then finally, if you can comment on any major change in pricing or promotions by the publicly traded companies or your competitors that are out there. Is the promotional environment better, worse, or the same as a few months ago? So Mr. Multi-State, if we could start with you, that would be great.
Sounds good. I'd say today I'm at about an 8. And it's interesting because I will say that I was at an 8 2 months ago. The reason it was 2 months ago was all the Schedule 3 tailwinds. That, win got taken out of our sales, but it's being replaced with recreational purchasing being allowed in Ohio. So we have kind of a micro situation, which is very beneficial to us as an entity, and we think it'll be our next most significant geography that we're in. It's a very well-run state, really controlled program, and it's going to be a big boon to the operators that have exposure to that geography. So that's kind of one thing replaced the other, and that's why I still remain optimistic about what's going on going forward here. In terms of sales growth, I'd say we're about 30% higher than we were a year ago. And we were running about the same type of sales growth last quarter. A lot of this is volume. It's not pricing. This is inclusive of pricing suppression. So the volume is truly driving what we're doing. And that's coming from a little bit of new doors being opened up for us, specifically, as well as more wholesale volume. The mix of our business has increased to where it's more even between retail and wholesale. So wholesale has been carrying our growth. And then lastly, to talk about the promotional environment, it still remains heavy. I think it's going to disappear in Ohio. Ohio is going from a very tight medical market, which was oversupplied and not having patient growth, to now being adult use in the 5th, 6th most populous state in the country. It's going to be kind of tremendous. So there will be a very minimal amount of promotional. It'll be all about supply. However, in our mature markets, Arizona, Illinois, Michigan, the promotional environment is significant. There's customers want perceived value. They want headline discounts, and that's just going to continue. It's kind of the nature of the business, especially when you're in retail areas where you have multiple stores. Now, how you design that and how you make the customer feel is how you kind of ultimately drive your margins, which I think have remained steady. But the customer does want to see that at retail.
And could you give us an example of the promotional landscape? Like, what are you doing in your locations?
You take any day of the week. You're going to work with your vendors, and you might say all of X vendor is 30% off today. Now, you may tweak that to maybe you need to buy multiple items. It's a buy more, save more, so you can drive your gross margin by driving volume. But that's what the customers want to see, because they're seeing it next door. And again, it's very different in each state, but that rings true that the customer wants to see that they're getting a discount compared to whatever's happening around the corner.
All right, let's bring in Mr. Global. What are you seeing out there?
Hey, nice to be back. So let me start with the U.S. Still very not very optimistic in the Nevada markets. It's been trending sideways. There's no growth. Looks like for the last 2 years, it's not going to improve. There's been and similar in other states that we're in. We're looking at similar flat lines. The bright spot, what's really moving right now, the European markets. Germany just took the narcotics derivation off of cannabis. That means that for any reason, whatever reason, a doctor can prescribe it. And people are just what I would call robo-scripting out there. Clinics are robo-scripting. Scripts are going off the walls. And I think what was a $300 million market will probably end up a 500 million euro market this year. But the bigger news is that now that the HHS has put out the 252-page report, and if Schedule 3 does happen, there's already a global wave of countries coming online. So Japan just looks like it's going to move to a CBD market. France is coming online with a extract-only market. Spain's coming online now with an extracts-only market. Czechia is following the same thing Germany's doing. And so optimism over here is a 9 going on a 10 because new countries every day are announcing plans to do at least decriminalization, some sort of legalization plan, or some sort of more liberal medical plan. And that continues on even throughout Asia. They're talking Australia's still one of the biggest markets. Israel, Australia, Germany, UK, Poland is surging right now. That's the country to watch for inner EU for the most explosive growth. So over here, we continue not only to be optimistic, but prices are moving up again because there's a shortage of supply, especially in these newer countries that are trying to secure positions in front of the older countries like Germany and UK and Australia, who have very clear lines of supply. So now these other countries are fighting for the supply by raising prices, and it's putting pressure. Although the volumes are much smaller than the bigger countries, I bet that will change within the next 9 to 12 months.
Thank you. Let's move to Mr. California.
Hey, good morning. So optimism at the top of the year was a 6. That had been an increase coming through 23. 2 months ago in April, as we rolled through 420, that increased to an 8. Today, it settles back at about a 7. The driver for that, obviously, is Mr. Multi-State, Tim alluded to, Schedule 3. Yeah, a lot of optimism about it, but still a lot of unknowns as to exactly what that means. How's it ultimately going to affect business? Is it just a 280E drop, increase in profitability, et cetera? There's still continued fallout and consolidation in the California market. That's a plus and a minus. Good operators continue to survive, those who have access to whatever capital resources are still out there, which are pretty thin these days. And the consolidation comes from those who are just going away. They burned up all their bridges. Credit bottleneck is still the number one driver right now. It's just, I'll cap it off at the end for what the solution is, at least what the perceived solution is for anybody who's a solid operator. But right now, that is the true bottleneck. From a sales growth perspective, January through April, it's a little longer than Q1, but it was about a plus 11% for us. The month of May, however, was a minus 18. So it was a pretty significant pendulum switch. June, we're not even halfway through, and seems like it's leveling off. Hard to say, hard to know exactly where that's going to go. So Q1 is an up, Q2 is a down and flat on a comparative basis to 23. One little side note on that as well. I know the DCC recently had reported that, California sales in Q1 were significantly lower than in previous years. In fact, they were even lower than Michigan, which has a quarter of the population. I want to point out that there have been a lot of transformative sort of reporting things that have occurred, at least in the California market here over the last year. Most notably would be certain retailers that might take a $20 eighth, and rather than reporting a $20 sale, will ultimately report a $16 sale of packaging, which is a non-report, and a $4 sale of cannabis. And I don't see the DCC actually cracking down because it's a very gray area to really determine what the tax code effectively should be for that. So that reporting that seems lower is likely being driven by those types of changes because it's just the reporting that ultimately affected out there. Not unlike how an MSO may just have their own interpretation for 280E tax guidance and what they're doing on their own books. Pricing and promotion changes. I think it's a dichotomy of the market right now. There's either a group that is the race to the bottom and they're going to extract every single thing they can from every other supplier that's out there, burn the bridge, and it doesn't really matter because they're looking at profits today. There's other groups that are really effectively running an infinite business practice, meaning that they believe in their brand, they believe they have a good product, they want to continue to sell that product, but they only want to do that with a trusted network, with a small group of people, whether that's retailers or a distributor who they know is ultimately going to pay them, because that's really what's happening, right? People are running out of money, then they can't reinvest to get the inventory that they need so that they can continue to make the sales. And that cycle just, it either spins up or it spins down. It's been spinning down for the last year. Surprises that could still exist. Some may or may not be aware that on June 14th, just last Friday, the LA Times reported a massive, pesticides sort of expose done with Weed Week as it relates to pesticides being included in California products still. Hard to know what the shakeout on that ultimately is going to be. It's still early on. Is it another vape gate? Even if it is, I think all of that stuff, tends to go up in smoke over time, but that was an unknown. Nobody knew that was coming. The Schedule 3 implications, as I talked about and mentioned before, we don't really know exactly what's going to happen there, nor do we know what happens with the political landscape. And I think, as Tim alluded to, I don't think anybody expects any real shakeout, but if you look at certain places like, let's say, Florida, you kind of see the dichotomy of what's happening there legislatively and, what they're trying to drive versus what political statements ultimately come out and they're going to push back on. So conclusion, credit law. We effectively need credit law. People who buy stuff ultimately need to pay for it. And if they don't pay for it, they don't get to buy from anybody else. That would fix a lot of the issues out here. That's the summary.
All right. Thank you. That was very concise. Let's move to Canada. Mr. Canada, what are you seeing out there?
All right. I'll preface it with just a little bit of background in case there's anyone new listening in. So we're an indie retailer, and in Canada, you have a very clear distinction. The government monopolizes wholesale. So every province or equivalent to a state has its own wholesaler. We have to buy from them. And they kind of opened up fired the starting pistol for the race to open retail 4 years ago now. So we are a retailer that operates in that. We climbed up, stabilized after about a year. COVID hit. It had its ups and downs. It was actually pretty good because everyone was getting all kinds of government subsidies. When the economy took a bit of a dive, things slowed down in terms of consumer spend. And that was the narrative of my last few updates. Like, where's the bottom going to come? Like, we saw the average basket value sort of dip and dip and dip, and we were really uncertain, like, how low is this going to go? And so looking in the rearview mirror, we now see that it bottomed out in October, November last fall. Of course, there was a spike with Christmas spending, but that and it came back down into January, February, but February didn't go as low as October, November, which was great news. And then it's sort of been climbing upwards ever since. Which is great. I mean, it's not going to the heights where everyone was getting government subsidy checks and just spending it all on weed, but it is climbing back up slow and steady. Just recently, we had announced that we're getting our quarter-point rate cut, so that's just boosting optimism into the summer. So that sort of flows into the Q1 and Q2 question. We saw Q1 with a 3% rise in revenue driven by increased number of customers spending slightly more. And Q2 is trending to a 4% rise in revenue versus Q2 last year. So I gave the background just to preface that we're sort of in a mature state, as a retail operator. But I should also throw in that, I mean, if for any investors out there looking at the market from a production side, like, my optimism on the retail side, I would say it's a 9 or 10 now, because it's like nowhere to go but up. The stores that don't know what they're doing are closing, and all of the operators, the retail operators that are still around, we're the strong ones. So we've had this little survival of the fittest race for the last 4 years. The strong ones are coming out the other side. I see nothing but good things from a retail perspective. From a production side, my optimism would be like a 3 or a 4. They were hoping for excise relief in the federal budget this past spring. It didn't come. Not a huge surprise because it's more of a liberal-leaning sort of government that isn't into giving any money back. They're just spending more. So there was no excise relief. The provincial wholesalers strategically ramped up selection. So they launched a program where they wouldn't stock inventory, but you could place orders with them. They'd aggregate the orders and pass them through. Those came with longer lead times, but allowed them to ramp up their SKU count to ridiculous levels, like 5,000-6,000 SKUs available. So what that's resulted in is just ramped up competition among producers. And because we're federally legal, you've got producers from coast to coast, BC, Alberta, all the way out to the East Coast. Somehow the East Coasters have become incredible at growing weed. And then, of course, lots of domestic, not domestic, but Ontario and Quebec growers as well, all vying for the retailer's attention and spots on their shelf. So that has resulted in, I would say, intense competition, increased promotional activity from the producers. They are desperate to get that space. They'll do anything, beg, borrow, steal, pay you, throw swag at you, like almost you name what you want. If it gets them into your store, they'll give it to you, sort of thing. Even though a lot of that is prohibited by different government regulations as well. So it's pretty intense. And if I was a producer, my optimism would be super low. If you were an investor looking at producers, I'd be very cautious. I think Tim mentioned earlier that the Canadian market stock exchange will take just about anybody. And the general knowledge in the industry is that the good growers are the private ones because they're running real businesses, whereas a lot of the public ones are selling dollars for 50 cents to post revenue numbers to hope for a buyout or something. So I dig extra deep if you're looking at any publicly traded producer.
Thank you, Mr. Canada. That was a great wrap up. Thank you to all of our operators and Tim Seymour for joining us today. We'll check in with everyone in a month or two. Next up, we have Sonic Automotive CFO. I'll turn it over to Greg and Jake.